Bitcoin is back up over $36,000 this morning, and it has some room to move to the upside. However, there's an article we're going to talk about in this video that we might be seeing a potential threat to the future of Bitcoin price. Yes, we've been asking that question historically. We always have something that crashes Bitcoin's price by anywhere between 30 to 50% in this pre-halving cycle of the 4-year cycle for Bitcoin. But what's that catalyst going to be? Well, we have a new emerging threat, and we're going to discuss that and a short-term price prediction for Bitcoin. So make sure you go ahead and strap on in and pay attention to the entire video. Let's start off by let's get the negative out of the way. Let's talk about the negative stuff first, and then we'll talk about the positive, the price action coming hopefully very, very soon. Well, there was an article that came out yesterday or early this morning. Cathie Wood explains Gary Gensler's motive behind delaying spot Bitcoin ETF. Now, a lot of people, just in case you have not been caught up to this, there is a window right now. It opened up back on the 9th, and it has 2 more days to the 17th that, technically speaking, we could see an approval of 1 or more spot Bitcoin ETFs coming. Although that window's getting closer to ending, and there's no sign from Gary Gensler that he's going to say yes. Well, Cathie Wood chimes in here and says, there's a reason why he's not saying yes, and he probably won't say yes in the next couple of days, and we're probably kicking this can down the road into January. That reason is, Cathie Wood says back on November 14th, that was yesterday, Cathie Wood said that Gary Gensler is aspiring to be the Treasury Secretary, and that might be the actual reason for him delaying the spot Bitcoin ETF. Interesting. It's very funny that Gary thinks that he has a long future in the U.S. government. I mean, every single time he goes before Congress, he just gets raked over the coals. But theoretically speaking, if he can keep his good buddies Joe Biden and Auntie Beth, or what we call Elizabeth Warren, in power, maybe they're able to twist some knobs, get him into the places he wants to get. Maybe he can replace Janet Yellen as Treasury Secretary. That would be scary in my eyes, but it's possible. It's very possible. According to Gary, he says the hesitancy regarding a spot Bitcoin ETF is rooted in his concerns about potential manipulation. Now, Cathie Wood says that the decentralized and transparent nature of Bitcoin network, it makes manipulation highly improbable. I'm actually going to go ahead and disagree with Cathie on this one. We've seen manipulation in Bitcoin, even without all these institutions coming to play. But you want to talk about manipulation coming to Bitcoin, It's BlackRock. It's ARK Invest. Maybe not ARK Invest much. It's BlackRock. It's Fidelity. It's these other large institutions. JP Morgan trying to get their hands involved here. These are the entities historically known for manipulation. They're historically known for screwing their users, their buyers, out of the best buys and the best sells. They tell people when to buy. When they want to buy, they tell people to sell. When they want to sell, they tell people to buy. So you want to talk about manipulation coming in. Technically speaking, these spot ETFs are going to bring in manipulation. That will come with increased price action. It's going to be awesome, but there's also going to be manipulation. So there's some things here that, Cathie, I disagree with you. I love that you're fighting for Bitcoin. I love that you're trying to make this point, but sorry, Bitcoin is manipulated, and it's going to get worse, and that's just part of what we all have to get used to. Now, it's funny. It's really funny, though, that that's what Gensler's hesitancy is potential manipulation. And Larry Fink and BlackRock have proposed what they think a real threat to that manipulation could be. And this is where we get into, hey, is there a problem coming? Could this be a major problem that crashes Bitcoin's price? Interestingly, BlackRock has mentioned some stablecoin risks that would arise for the spot Bitcoin ETF approval. BlackRock highlights the volatility of stablecoins, emphasizing their potential to cause fluctuations in Bitcoin's price. Although stablecoins have a fixed value tied to the fiat currency, they often lose the peg in the case of events like the banking crisis following SVB's collapse earlier this year. So, that was really more of a bank situation, but yeah, let's blame the stablecoins. This is interesting because anyone who's been in Bitcoin now for a while, we've talked heavily about the correlation between the health of Tether and Bitcoin. Every time Tether has had problems, so has Bitcoin. So there's a little bit of weight here. You could say, Larry, I think I understand what you're trying to say here. You might not completely be wrong, but you want to talk about a problem that would drop Bitcoin's price? We've been speculating, is it going to be a coming recession? Well, recent inflation numbers and recent GDP kind of hints at the fact that I don't think recession is going to be too much of a concern in the next couple of months. Some people are going to argue with that. They're going to say, like, oh, no, all of us Americans, we know how expensive it is to live. I agree with you. Listen, there's a difference between what goes on paper and what reality is. But when it comes to affecting the price of Bitcoin, it matters what's on paper. And on paper right now, we're not looking like we're coming close to a recession. So if that's not the threat, what is the threat? Because historically, we always see a 30 to 50% dip in Bitcoin's price before the halving event, and we haven't had that happen yet, right? So what is the catalyst going to be? This is interesting to me. I'm not predicting with 100% certainty, but I do know if we're going after stablecoins, what are the big ones? Tether and USDC. Well, who's one of the big who's one of the big owners and founders and pushers of USDC? That's Binance. We already know the SEC and US government are going after Binance heavily. And while CZ has been able to continue to hold up that four-finger strong photo, and he continues to beat the FUD left and right, if they ever sink any teeth into their attacks of him, if they ever start to really raise more concerns about stablecoins, this could be problematic. And the fact that Larry Fink is now bringing this to the attention, it's just one more thing for Gary to go after the crypto market. If there's a heavy attack that actually has some weight to it against stablecoins, against Binance, that right there could be our catalyst for that 50, 40, 30% pullback in Bitcoin's price. Now, I want to let you guys know, I'm not talking about 50% from current price action. I'm not saying 50% from 38. I still think we're about to go higher in price. And we're going to go to the charts, and I'm going to talk about that here in just a couple of minutes. But if you are looking for something to be a concern about what could bring a dip in Bitcoin's price, I think we've just found the culprit. It's stablecoin regulation. Does Gary Gensler and the U.S. government listen to Larry Fink and say, uh-oh, we got a problem? We got to fix these stablecoins before we can approve these Bitcoin ETFs to fix the manipulation that could be coming. Something definitely to keep your eyes on. But guys, that's enough of the doom and gloom. That's enough of the negativity. Let's get some positivity coming in. As I said in the intro, Bitcoin is back up above $36,000 yesterday. I don't know why I'm on the 2-hour chart. Let's go to the 4-hour chart. Yesterday, we had a pretty decent little dip. We called it a crash, but crash wasn't the right word. Crash should be saved for at least 20%. I feel like 20%, closer to 30% should be what we call crashes. We only crashed, or we dipped 4% of the day, 8% down from the high back here at 38,000. But it was scary, and it did make a lot of people freak out. Well, we wicked down below this blue support level, rising support level, but we were able to come back up, and this morning, we are back up here above 36,000. What's really important here, daily chart, guys. Yes, we have a wick coming way down below, but the fact that we're able to close our daily candle right at that blue line, that means that this bull flag is still in play. By the way, guys, bull flag prediction takes us all the way up here towards what we were just talking about. It goes higher now that we have a new low. So I said 45. Now we're talking about a price action. Let's go ahead and move all of this up. We're talking about somewhere about 46.88. That's high. That's pretty high. But it's something that you definitely should keep your eyes on, and we still have it technically in play. Let's take a look, though. Let's get rid of this little flagpole right there and take a look at a reason why I do think Bitcoin, not only because we're rallying this morning, but I think that we could be getting back up to some new highs here very, very soon. 4-hour chart flashing oversold almost all day yesterday. RSI dropping all the way down to 10. Money flow keeling over and starting to move back to the upside. Massive MVP oscillators. And here's the thing. We're on the 4-hour chart. We've been looking at the lower time frames a lot, but let's go back to the last time we actually had a strong bullish reversal flash. We've had bullish divergences that have been very good calls that the price goes up after we have those. But we haven't had an orange box or a green triangle or a peak seeker all the way since way back here in October, back on the 13th. Well, that's right there before this run began. In a bull trend where you're setting higher highs and higher lows, this is something you don't trade against the trend. And anytime you see a bullish indicator come in here on the chart prime oscillator, in a bull trend, that is a powerful, powerful tool. It's the bearish ones you're not necessarily super convinced of. Look at how many we've had here. And while some of them ended up being decent little calls with decent pullbacks, some of them did get ignored or delayed. And so, while you might have been tempted to not necessarily regard the bearish calls, not having a bullish call on the 4-hour chart for over a month, to me, is a massive sign that this was going to be respected. Like I said, it wasn't alone. It had a bunch of friends with it saying we are massively oversold, even though we're setting up a higher low. This is something beautiful. We also, it's not printed yet here on Chart Prime, but look at how we set a higher low right here, yet a drastic dip in our oscillators. That is called hidden bullish divergence. It's a continuation pattern, meaning, yeah, guys, this rally is not over just yet. And when I look at the oscillators here, going all the way down the hourly chart, I do think there's a chance we're going to have a little bit of wrestling coming very, very soon. Our RSI is back up over 70 on the hourly chart. We're not getting anything flashing over here saying overbought just yet, but we're getting higher. But the 4-hour chart, we're approaching that mid-level with RSI. Sometimes you see some hesitation right there, but our Chart Prime oscillator is still super, super low, which means we've got some room to go to the upside. But where could we see the price go? I already talked about the super bullish look. Oh, look at that. We're over 36.3. That's awesome. I already talked about the super bullish look that goes not only just to 40,000. That's going to be the first one you're definitely looking at, but all the way up here towards the mid 40s. Let's take a look at Bitcoin liquidations. Yesterday, we had a bunch of longs liquidated, but let's take a look at our liquidation heat map to get a good call of where we potentially could be. I got to zoom out here, move this over so you guys can see it. Now, yesterday, let's go to the weekly chart for this. Yesterday, we had a massive yellow line sitting at 35,000. I actually discussed this when I was live on the Discover Crypto show, but look, that wick came down, cleaned out the yellow line. We no longer have a yellow line here on this heat liquidation map. Why is that important, everybody? And I think it's getting cut off. So you guys, let's see if I can make this where you guys can see it. There we go. I think that's, well, it's still getting cut off. I don't know. I have to figure out why you guys can't see that whole thing, but all right, that's kind of bothering me now. Whatever. We're going to kind of zoom out here. You have to trust me as I go over the numbers. Huge yellow line here at 35,000. We cleared that out. It is no longer there. The yellow lines are where we see heavy amounts of liquidity. That means that's where a lot of people want to see the price get to transact at. If it's low, that means that's where a lot of people want to buy. Up high, that means it's where a lot of people want to sell. Well, we cleared out the lower level and we're moving back to the upside. And while we technically have some lower levels of liquidity between us and 37,000, the next time we hit that strong yellow line is all the way up here. You guys can see it, 37,500. After that, we get another strong yellow line all the way at 37,800. Let's go back and look at the chart. Let's pull down the oscillators and take a look at that price action. 37.5 is right where we were wicking to. Yes, we wicked all the way to 38,000, but after that, we corrected. We kept bouncing back up here and hitting our heads right there on that 37.5 level. So there's a lot of liquidity left up there. Not enough people either got to sell or got into their orders they wanted to get into. So that's the first level I'm looking at. Watch out for a pull back up to this green level, back up here to 37,500 within the next couple of days. But again, that next one, 37,800. It's not quite back to the peak that we had on November 9th, but it's back up towards the top of this red level. And the thing with these liquidation maps is if you can start closing, if we fill these yellow lines and then we start closing a little higher than them, that's when you start to see a potential reversal of what we saw yesterday. Let's scroll back over here and let's go look at liquidations again. Yesterday, within the last 24 hours, we saw a massive amount of longs liquidated, over 110 million. I saw another site talk about $300 million worth of longs were liquidated. Well, now that we've had a bunch of longs liquidated and people have probably entered shorts thinking that the price was going to go down to the downside, and they're going to be continuing to enter shorts on the way up because they're convinced we're in a lower low situation, lower high, lower low situation on the shorter time frames. Watch for this to turn red and potentially millions of dollars, hundreds of millions of dollars of shorts end up getting liquidated. If that happens, just like what we saw right here, if you guys are wondering why we got so explosive after breaking through 32,000, it's because that was the last level of defense. And after that, we just saw a plethora of shorts liquidated. We saw the same thing happen with these runs where there were so many shorts ready to go that when the price pushed up above them, we saw liquidations shoot the price to the upside. We could see something similar happen. It's going to be a normal pull. It's going to be slow and steady back up here at 37.5. But if we can start to clear 37.8, 38,000, watch for a huge jump in price, at least up here to 40,000. That's going to be the first level that we're going to be keeping our eyes on. One of those reasons why is because of Fibonacci. Let's go ahead and pull this up for you really quickly. Fibonacci levels, golden pocket's going to be sitting right here at about $40,000. However, watch out for a move closer towards that platinum pocket up here towards $50,000. Why? Well, this is exactly what we saw happen last cycle as well. Look right here. You guys will see we topped out in December of 17, had our bear market bottom December 18, and then we made a rally here, pushed through that golden pocket, hit that platinum pocket, the 0.786 level, and then we started our retracement. Are we seeing the exact same thing happen right now? I'm not 100% certain, but it's looking more and more every single day like we could see something similar happen. But let me know what you think down in the comments. Are we going to 50,000? Are we going to 40,000? Is the top already in for this pre-bull market rally? Let me know down below what you guys think. Also, let me know what you think about that threat. Are stablecoins actually in danger and Bitcoin actually in danger from the US government? Guys, that's all I have for you in this video. Make sure you smash the like button on your way out. Hit subscribe to the channel for more content just like this. And with that said, I'll see you in the next video.